Perfect. Welcome to Morning Minutes. Myself, Michael Bergio, Mark Novak, and special guest, Manly Royalty, the Unicorn Hunter, as Mark's named him, David Allen from DA Properties. How are you, David? Mark?
Hi, Michael. Hi, Mark.
How are you, legend?
This morning, we're going to be talking about, one, the effects about COVID-19 and how property owners should be looking at their property. And also, everybody thinks their property is special and it's a development site and it's worth $1 million, but is it? And what are some key things coming out of COVID that you should think of if you're a landowner, and also what you're looking for in properties as well? The unicorn, because probably, I know David may be able to give insight to it a bit more, but I reckon out of every 100 property he looks at, there's probably only one or two good ones in there. And then the price argument's a whole different argument. Mark,
it's big, because I think a lot of people, you're right, like there's just so many people think, oh yeah, developer, heaps of money, oh, I'm going to sell this developer, this can be developed, let's sock them. But it's really a very, very unique about, if you look at how many properties are in Sydney or the Northern Beaches, for examples, there wouldn't be many that have this great upshot that could be optimized on. And it really is a specialized field to be able to identify, because if you look at what David does, what you do, Dave, building comes into it, architecture comes into it, saleability comes into it, real estate agent comes into it, excavation comes into it, compliance, council, and after you overlay all those things on a potential development, more often than not, it's a dead duck.
Yeah.
Let's talk.
David, tell us about it. What's your views on the COVID-19? I know we've got a slideshow to bring up as well, but just sort of take it away with your thoughts on that and what you do.
Sure. Look, what I do, I think you two have explained it perfectly.
We're done. Thanks.
We're done. I would say that we look at 200 to 300 properties each year. And
wow.
If you're lucky, one or two of them might be something that you end up having as your next development site. So you couldn't be further from the truth, Michael. And Mark, as you said, all of those things that you spoke about need to be included both in your initial feasibility and your assessment. And what happens is that process continues through the next 3 or 4 years as you go from macro to micro and deliver the product. And I think the hardest thing for people to appreciate is the focus of a development in its end form and realization of profit or money. It's not just an instantaneous thing that's occurred at that point in time. It's usually a 3 to 5 year journey to get there. So if you average out the money over 3 to 5 years and not being able to get paid on the way through, it's probably just like any other job, but it's the thing that we do and the group that we work with. And we really enjoy working with creative people that have a collaborative and collective value sharing set of values about them. And that's actually the fun and the joy that comes from development.
It's really feast or famine, isn't it? You're either feasting as in you've sold it and you got stacks of money because it was a well done site, but then you're famine, you're not eating for 4 or 5 years, so you got to put that over a long period.
Yeah, correct.
I think let's bring it to a sort of a live example. Let's use a mixed use site, for example. I think a lot of people can relate to maybe your corner set of shops where you've currently got a cafe, your little grocery, it's on a decent sized block of land, and your options, let's say you're the owner there so you can relate to it. We've touched on it many times, David. What are your options? So do you got to work within the existing floor plan, as in what would be more lettable now? Let's say they've got what it is probably the best lettable, but what's sort of that thought pattern if you were to look at developing as in a higher use? What are some of the first things people can mentally check off with themselves?
Okay, I think if we look at two aspects, if we look at options or alternative uses, You've highlighted the first one. What can I get out of the building or the existing structure as it is? So let's consider, like many owners are doing at the moment post-COVID, will my current tenant or tenancies like my current tenant, what will that return me? And what do I need to expend? The other alternative is with the existing structure, are there other alternative tenants that we could swap the current tenants or type of tenant out with, and what will that show us?
And that could be like going from office use to maybe food or retail, to put in layman's terms.
Yeah,
or
correct.
Way around.
Yep. Or they might be going from food to a fashion retail, just something that's different, that has a different risk profile. And then the third alternative is then, okay, what else can be done with the building, either refurbishment or redevelopment? And that's both what's the economic life left in the building. If we look at planning and zoning controls that actually control what you can and can't do with a building. And then I think you've got to step back and look at all those alternatives and what is the cost, what is the risk, and what is the time to deliver those, to manage, to measure off against with the associated values that would, and rent that would come from those three alternatives.
Just bringing up the PowerPoint we had before, which is showing that.
Dave, when you there is a raw site or a DA approved site, how much profit will an average bear, like an average developer, want to actually make it worth it for them to proceed on doing the development? Because another thing I dropped out, I forgot about, was funding. Funding is a massive part. Interest rates, can you get the loan, funding the project for a long time? You know, bearing all that stuff that you're doing, what sort of profit does a developer need to be working on to make it viable to buy off somebody? And
okay,
I guess that's raw and DA approved.
Okay, so let's get up in the helicopter at 40,000 feet first.
Yeah.
You are right. The debt market is integral for most developers because they need to borrow a portion of the funds that they're going to need to do a development.
Except for you, because you do it all in cash because you're so successful. But yeah.
Yes, I know, I agree. But what is interesting is, it's interesting from all players, is there's a cliche that development is bookended by the independent valuation. And what I mean by that is, in order for the bank to value a raw site or a DA approved site, there's an underlying independent market value of the site that they need to have undertaken by a valuer. And that can only be assessed or derived from by applying what is the independent market value of the end product. And
end product. When you've built it all, what that's worth.
So what you've got, and then you've got, in order to get the site value, then you've got to start with the end revenue and then subtract off, the exorbitant agent fees that Novak would be required for achieving a great result. And then
great result. Emphasize the great result.
Hey, always the great result. You've never delivered us anything less. And then all the cost of consultants and construction and everything till you get down to the site, and the money that's left at the end is the value of the site and the stamp duty that you would need to pay for it. So extrapolating the answer to your question is, a bank would require an allowance of profit, and if we call it profit on cost, what is the residual profit on the cost of the project? They would want to see a ratio of 20 to 22% before a DA was achieved. And if it was a DA achieved site, they would adjust that profit from somewhere between, say, 17 and 20%, because there is less risk in association with getting the DA.
Wow.
But normally
I
you probably,
think
that's it.
I think
That's
that's tight.
That's in an ideal that your costs are, that's if you've got time, say an option agreement, but a lot of times you don't, because as you know, you're probably wanting on your rough figures, you're probably wanting to see about 30% because you know everything is quite variable from especially civil costs. So before that would you say those figures, David, would be if you've had an option agreement and you've done proper due diligence, you've got 6 months, that's where you get your 22. But if you're going to buy something on a 6-week campaign, would you be looking at 30 because you know it can vary so much on civil costs, or
So
you just wouldn't buy it like that?
No, what I think happens if we dig a little deeper into those comments, if there's a 22% profit on cost pre-DA, it would allow in a cash flow, the bank's valuer would allow in the cash flow, how long does it take to get the DA? And all of that's costed in. That's 20 to 22%, including all the time and the cost to get the DA.
Yep.
So it takes into account that period of time of, let's call it 6 to 15 months to get a DA of holding costs within the cash flow.
Yep.
And likewise, prior to DA, the allowance from the valuer on contingency for construction costs might be between 10 and 15.
Okay, so it's already worked into that 22-year contingency of 10 or 15.
Yeah, so there's additional levers that a valuer will use that allows for time, for cost, and for risk.
And then there'll be a contingency on resale where it could be 30 mil and then they're doing 28 to 20. So that 22 it's actually already been watered down quite significantly. So on every sort of market resale land, you've already got 10 or 20% contingencies all the way through. So that's probably, I think your comment, Mark, saying that's a bit tight, but there's already 20% worked in. Is that correct?
Yeah, we'll say. Yeah, so the contingency I was focusing on was more deliverable contingency.
Yes.
Yeah.
Perfect. And then so there's a really good example, which I think will hit home to people. I'll bring up the Lauderdale one, which maybe you want to talk through a bit of the mindset when you look at a site, because I think a lot of people, it's quite common to sit on maybe an older home and then they think, what can I do? Do I knock down, build a new home? I've seen duplexes built. So maybe I'll bring up this example and then you can go through.
While you're doing that,
Yep.
It seems like a real scary world. And I know we do business with developers, and there's not a lot of animals that are of this kind, that of these unicorns that continue the test of time because of that feast and famine. But even when you look at the property market swinging 5% through COVID-19, if a property values have changed for a developer's site 5 or 10%, that could be eroding up to half of their profit on the site. Wow, what a bullish business.
Yes.
And I'm sure Dave's got a lot of horror stories that he's seen. But I've got two. I'm bringing up a split screen. Maybe I'll do one at a time. So first of all, this is Fairlight. So David, you predominantly work Northern Beaches.
Yes.
Yeah.
Yes.
And I can tell, I can sort of comment on whenever I need to know prices to all the viewers out there. David's one of my first calls if I'm looking at a property. The knowledge he's got from every development site that's coming up on the ground or preview, he knows all the figures. So he's
one of the best unicorn hunters.
Yeah.
In the Northern Beaches of Sydney, Australia.
So I think here's an example, Fairlight. What's the zoning here, David? What makes this special? If you can talk and see, because this looks quite standard. I reckon you probably see 100 of these. Like if I looked on realestate.com now, I reckon what that ad looks like, that's on the screen. It'll be up on the Facebook screen shortly. That's pretty common to what's on offer. So why would you look at this one compared to another one? Why isn't developers buying every single dwelling on the market? What are sort of the differences Okay.
This particular property was of interest to us because, firstly, the shape of the site. If you notice, there's a wonderful 20 metre frontage.
Yep.
And that allows to create 2 semi-detached homes with a good 8 to 9 meter frontage each, which is wonderful. It's not going to be too skinny. The other thing that was wonderful about it is it's got global standard views that you had there before out of this to the Sydney Heads. But the challenge of the site, which to me was the opportunity, is that the site's between 28 and 44 meters in depth, because it has a variable front boundary to the road. It raises 16 meters over that depth. So
Yeah, wow.
When the property was put on the market, we had a geotechnical report that we used from adjoining sites that had development done, and spoke with a geotechnical consultant and a trusted civil excavation contractor who we deal with regularly on projects. And summary is there's 2,800 cubic meters of sandstone to be taken off the site. Now, so Michael, there you go. There's what we've just taken out of the site.
How much did that cost?
That's $500,000.
And correct me if I'm wrong, I think to a developer, it's not the resales which is which you hold your breath on. It's probably the civil and excavation cost on a lot of sites. Like that's where the money can be. That when Mark referenced feast and famine, it's probably in this stage.
That could bury a developer. So you and the wife and the kids dug all that out.
Yeah.
Yes. It was like the Great Escape, just a teaspoon and just walk down the road and shake the trousers and then back to the site.
But if a developer didn't know his stuff, right? If a unicorn hunter didn't know their stuff and they said, oh, yeah, I'm going to build 2 houses, like you'd have to put almost $600,000 into your costs, whereas the average bear may think there's $100,000 in that. That's enough to sink the developer.
Yeah, and I think also with your builder and your civil contractor, you know, we're drawing on 30 years of deep, trusted relationships. We have 100% confidence in our civil contractor, and my business partner and builder, Jim Casey. He's 40 years a builder, knows exactly what he's doing. So to be able to have that trust within your supply chain, to know that 500 is 500, and we've put a contingency in there. We know it's not going to be 800. We know it's not going to be a different amount of money. But if while they were digging in that sandstone, something was not as the geotechnical report says, as has been the cases,
dinosaur bones.
Yeah, correct. Then all of a sudden your whole profit's gone, and that is just development.
And that's what it is. So if because that's how scary it can be. Because if your GR is 9 million on site, you're buying for 2.5, and you're doing 20% profit. Well, that it could be only $1 million. But I'm sure when that agent was selling that, there would have been people in there thinking they would do it for 200,000, and people saying it's 1.2. And if you're that person thinking you're digging that hole for 200,000 and it blows out 800,000, that's money gone, and you haven't even started building or selling. And you're almost thinking to yourself, I'm sure there's a lot of people out there who've started a project and just gone, I'm screwed. I've got to finish it just to get my money back. And that's probably not a pleasant thought.
But it's a good learning experience.
Yeah. Yeah.
Oh, to a degree. So for anyone who's just tuned in, we're talking with Dave Allen, one of the most successful developers in the area, and we're talking about developing your site, or friend or family, if you know anyone in the marketplace that's looking to develop. David's the type of guy that actually hunts these potential sites down, finds out if they're feasible to be developed, because, well, like you just said, after he looks at 200 or 300 of them, normally only 1 or 2 are feasible. And this morning we're having a bit of a chat about that. Michael, what about comments? Have we got any questions from any viewers?
No, just a lot of people hovering. I think their viewership is strong. So everyone's just loving the content. But I think a big thing, Dave, a lot of people, which sort of seems crazy, but you sort of get it, but then you sort of don't get it. You've got this block of land, but no one actually, well, not many people go down the process, which this is one of the main points of this show, is find out what you can do on it, because you could be sitting on a gold mine or you could be sitting on nothing. But a lot of the time people don't, or they don't know where to go. They're just like an owner may be too scared to contact a real estate agent because they feel they're going to get bombarded to sell it. They probably hear a lot of bad things about developers and real estate agents, just like car salesmen. And it's really got to know who to trust. And this is a big endorsement for yourselves, where you can contact someone like David and be like, hey, let's talk about, I'm not looking at building, but I want to know, am I sitting on a unicorn or am I not? Because that could affect your next 30 years of your life, where you do that. So talk us through a little bit of what's involved in that process. If someone contacted you and say, I've got a block on Fairlight, is this a development site or not?
Yeah.
Okay. I think it's great. I think for all property owners, Mark and I touched before that all development and dealing with banks is bookended by independent market valuation. So for the property owner to have the protection that they can always seek a view, whether they're dealing with a real estate agent or a developer, that's their insurance policy. They can get an independent view that will tell them, no matter what anybody else is telling them, is the unicorn real or not, based on the assessment that's been put forward, and is the value that's been put forward to them as a suggested price or end value, should they want to develop it themselves or sell it, is that all real? So there, I think, is the insurance policy and the confidence that property owners need to know that is available to them, because they may not be familiar with the development process. And if we look at...
How do you know you're not getting screwed by the developer? Like, because the developer's always going to come in lower. They're always going to come in maybe not quite telling you the exact depth of what can be done. If you're selling, if you're sitting on a potential development, how do you shop it to know that, okay, that is what can be done? And okay, obviously a credible developer like yourself would not do that, but sometimes they're not credible.
Yeah.
Yeah, correct. Oh, look, I think, the first port of call is that to take the information that you've been provided with to a independent valuer, but one that's on the bank panel of all the big four banks and the second tier banks, as somebody who they trust to value development sites when they're considering to have them funded. I mean, I think that's... So go on, Michael.
Yeah, so that would be someone's because a lot of times a developer may just knock on your door and say, hey, I want to buy it. You say, we're interested. This is the price. And before you exchange, you may say, show us your concept plans. What are you thinking? And then that's what your feasibility. And then you'll take that to your value. But a valuer, how would he know if that yield of 20 units is correct and it's not just 40 you can get there? How would you know that?
Well, the valuer would look at the town planning code, and it would basically set out the parameters of how many apartments the planning controls and the regulations would allow you to get on the site as of right.
Yep.
And they would use those ratios. So you would get they would value it for market value on what you are able to get on the site for the planning controls. Now,
what
if
type
the value
is that, because that's an extensive task from a value.
It is.
Yeah, I don't even think I was aware of they go into that much depth.
No, well, you've been talking a lot about valuers this morning. I didn't realise they had such an involvement in a developer's world.
Yeah. Okay. So wow. So so does he have to have a bit of I suppose anyone can really read a code, but would he liaise? Do they have a set of planners they would liaise with? Or is the valuer to get in that role's quite done a bit
let's just leave the valuer there for a second. We'll bring the valuer back in a minute, because it'll all become clear. If I'm Mr. Property Owner and I don't know whether my house is a unicorn or not, but knowing what I know, I would go through this process, and this process is what we go through for a number of people that come to us, and the people that you've asked us to do this for, Michael. So to share with the viewers would be, we would get a town planner and an architect involved to assess the site beyond if on the back of a beer coaster, we would look at the planning controls and do some rough numbers. And if it looked potentially feasible, we'd get a planner and an architect to review the planning code and have a more precise look than our look at 40,000 feet of both of those aspects. And then we would rerun the financial numbers on a theoretical development based on a more accurate view. If it still looked like it was a unicorn, that's when we would sit down with the valuer. So the valuer has, for their input information, a cursory report from a planner and a cursory set of massing sketches from an architect to incorporate into their analysis. So a valuer is not a planner and is not an architect, but they are well qualified to interpret reports from those people, which are integral inputs to them determining the value of a site.
So real estate agents come to you?
Yeah,
people with houses or land or sites come to you, and they throw it across your table like a sausage.
Well, look, let's just use Michael as an example. Often Michael's had clients come to us. We'll sit down and understand what they are wanting to know and what they're wanting to understand, and we can facilitate an assessment of their site. And look, if at the cursory view, which takes a couple of hours, that's not something that we need to charge for. If it doesn't work, which 95 out of 100 is the case that it doesn't work, then at least your customers know. If it is worth pursuing, then we're going to have to engage external consultants, planner and an architect, and pay for some time to progress further. Now, you don't need to get in-depth reports, but just a high-level cursory report. And if we take it as small steps, if it comes back that it still looks like a unicorn, and for example, for a home like the Lauderdale example there, it's a bit over $9 million development on completion. The assessment for the planner and for the architect that it cost us was about $6,000, and my time for myself was free. But if it's for somebody else,
millions if you were charging it.
Yeah.
But usually somewhere between $10,000 and $12,000 for a home, you're going to understand whether the initial thought of your unicorn actually is a unicorn or it's not.
And that's the key thing there, because that really steer. Because how many times, David, have you met clients and they've just been sitting on this property thinking it's a unicorn? Like, I've seen some horror stories where they're thinking it's 4 times the value. They almost leave themselves nothing to retire because they just think they're sitting on this, and they're not, and they're just gutted. And it's like, the reality is, you're spending more maintenance on your car over the 10, 20 years you've owned the property than you've spent investigating your property to see if it's even worth that. Like, it can be a bit heartbreaking. And I know it's a really good partnership we've had, David, because the more I'm qualified, because you're very similar to a real estate agent, you put in a lot of hours for a lot of...
that was a low blow.
No, for a lot of free work consulting. Very similar. And the more qualified someone like myself is to qualify them before coming to you, it just equals a better streamline that you can advise clients. But you would have seen it all the time, clients thinking they're sitting on this and they're just not. So it's almost silly not to do the investigations when you think you've got something.
Sure. Look, if you've got clarity of factual information, you can make informed decisions about all aspects of your life as well as your property. So if somebody is looking to sell their home and they and their friends and people say that they think they might be able to redevelop their site, surely you would investigate it initially and find out whether your property is a unicorn or not. 98 out of 100 are going to be not.
Yeah.
And if an initial review is that your property might be a unicorn, spending $10,000 to $12,000 to understand if that value of the unicorn is worth more than your underlying house value, it would give the owner the peace of mind, but also the clarification and the confidence to direct in which way they want you, Michael or Mark, to sell their home. Yeah. Sell it as a development site, sell it as a home. Or, go on.
Yeah. Do people recommend that? Do you recommend they actually get the DA to sell it, or do you recommend they say sell it to someone to get the DA? And if anyone who's watching, DA is a development application. So if you could do 4 units on your block and you wanted to get that approved, is it better for the owner themselves to get the 4 units approved, or is it better just to sell it as is and let the guy who's buying it to get approved? So my question to David is it better to get a DA on your site and sell it, or is it better to just let the buyer do it?
Yeah, great question. And look, earlier we spoke about when you're looking at alternatives, each alternative has time, risk, cost, and a value payoff. And I think it's as simple as let's look at it right now. If your home currently as a house is worth $2 million, sell it as it is, 6 weeks on an auction campaign with Novak, and it's gone.
Yeah.
With development potential, it might be worth
there it is.
2 point
time to achieve, cost to achieve, risk to achieve.
Yeah, so it might be worth 2.2 as it is today. Sell it by Novak at auction as a development potential site, but it might be worth, with a DA, $2.7 million. But it's going to take you 12 or 18 months to get a DA, and it might cost you $200,000. So each individual owner is going to have a different view. Do I want to wait 12 to 18 months? Do I have $200,000 to spend on the DA? And the risk is the council may reject or ask you to change it, and it takes longer and costs more. Is that worth an additional $500,000 payoff?
Yeah.
And that's up to the individual to choose. And a valuer, in the final assessment of what we would do, we would say to people, before you go to make your final decision, get an independent valuer to validate what we're talking about, so you have the confidence and the clarity of the cost, the risk, the time, and the value payoff of all your alternatives.
And I think the biggest thing about the value of the DA is also another thing you need to look at, and correct me if I'm wrong, David, is also how difficult it is to get the DA. There are some parts of Sydney where DAs do fly through. There's strong precedent. You know where say a suburb, every block is 600 square metres. You've got the same controls. There's not much variance. Council is quite consistent. And you need to look at how hard it is.
It's like the opposite to Pittwater Council.
Yeah, the opposite to here. So that way a developer, the premium, the value of a DA may not be that, like, for example, 500,000, because they're very easy to get. It may be almost at cost, because there is very minimal risk of not getting it. But then there's some areas where you can get caught up with council for 3 years. You've all gone through a few property cycles. It just can drag on. So to get something with a value, with a DA that you can start building straight away, can have very different value. So owners also need to find out how hard is it DA, one, to know if they want to go through that process for 6 months, 12 months, 2 years, or 3 years if you're in Warriewood. That has huge value as well. So you need to look at that, because not all councils are the same. And I'm sure sometimes you cringe when you know where a block is. It sounds good, and then you ask where it is, and David, and then they go, for example, Warriewood, and you're like, nah.
Great topic. Guys, what are we going to finish off on today, Dave?
Look, I think clarity of factual information is key for the property owner. Take those small steps. You can get off the bus at any stage in that investigation cycle. You're not committed to developing the property. You're not committed to selling the property as is, but you can take it as far as you want and get off the bus whenever you want, when the risk for you going forward is too much, or the cost, or the ability to wait for time. But I would always say to property owners, understand what you've got understand what the alternatives are in the future for your property and what the costs, risk, time and payoff benefits are, and then make an informed decision that meets what you need for yourself.
And I think a big thing is it's always cheaper to do 3 or 4 sets of plans than build a building wrong. How many times do people go, should I do 1 bed, should I do 2? It's like, well, let's do floor plans, because you build something that doesn't fit that market. It's a lot worse than paying an architect 3 times, isn't it?
Correct.
Yeah. An architect for 3 sets of plans cheaper than building 1 wrong building. So just keep having a stab.
And you know what I would say from what I've learned today, everyone who thinks they are on a property, know a property, can buy a property, whatever, ask the questions, because the answer is always no if you don't ask the question. And I'm absolutely shocked of how much people are willing to give good information away for free. Yeah. So, you know, just to ask the question, ask the real estate agents about that on that second set of plans, third set of plans, is this okay? I really get surprised that developers bring us stuff to sell after it's pretty much done. It's like, I've been here for 4 years. Why didn't you bring this to me before? We could have gone through this and nailed this even better. So, David, so talking to someone like you, it's you're almost a free service in that conception stage, aren't you?
Well, yeah, at that what we call as on the back of the beer coaster stage.
Yeah.
It's a service we provide for you guys, and I do that with Michael, you know, at least once a month. It allows you to get on with business with your clients, but also 1 in 100.
Yeah,
we find a unicorn.
At the rate we're going, we've got a few more years to get that one. That's good. But yeah, it's exactly right. So it's been really good. I think we want to do something a little bit more regular, because I think a lot of people, that development world there's not much information out there for people. And I think this would be really good to do something a bit more frequently. I know we want to do some myths about developments, probably your top 5 questions that are just debunked really quickly when people call. So we may try and do something once a month.
Well, why don't you collect over the next months from your viewers, what are the top 5 mythbusters that they want to understand from development?
Yep. Let's do that. And we'll see you at 11:30 today as well in Manly, David. That'll be good.
Okay.
And
Thanks,
another one I want to do is I want to pick a building and talk about it.
Yeah.
So we often, as the community, see something happen and go, oh my God. And there's always a great story with a lot of these developments and a lot of this stuff that happens. So let's pull that in as well.
All right,
sure.
Let's do it. Thank you, everyone. Cheers.
Thanks,
David, you're a gentleman. Thank you for your time. Really appreciate it. All right, and our audience, thank you, guys. I hope we answer some questions for everyone today.
Beautiful. Cheers.
See ya.